All right, I believe we are live. Welcome everyone to another edition of Market Pulse with your host Tone Vays, where we take a look at the traditional markets and the Bitcoin market pre-market open. And since I am starting late, I apologize for that. And therefore, we will be taking a look at the markets probably after they open. I may stay with you into market open. I don't have that many positions on that I need to babysit and manage. I am simply short the S&P 500. I should have been short oil, but I've just been waiting for a good buying opportunity in oil. And hopefully it will come at some price above 1 penny, because that looks like where we're headed. So let's take a look at all the traditional markets. I'm waiting to pull out your live chat. I really hope this stream's okay, because not only do I have so many tabs open that was slowing me down yesterday, I also have my broker open, which is like a giant platform. I will be buying a new computer, I promise. My $2,300 laptop that I'm currently using is clearly not powerful enough. My next laptop is going to be a full-blown like gaming laptop, like for like the most hardcore gamers, because clearly I need that kind of power for what I do as well. All right, let me close this. Let me minimize that. Let me put this here. And that didn't work. Not the way it used to work. So where is the Telegram? There it is. All right. Forgot to notify in my Telegram channels that I am going live, because for some reason, the alerts have not been good. Let me do that right now real quick. Well, anyway, now we'll skip it. That's okay. They all know, because I have messages I need to catch up on in those groups. All right, let's just go to screen share. Wasted enough time. We begin with oil. This is the nearest oil contract that is expiring soon. Even I didn't see this coming. Now, I've been bearish on oil for quite a while. This weekly candle caught me by surprise, but I was still confident that the 9 was coming. And I am now 99% sure that a 9 will show up. Now, this is a 7 candle. Next week is going to be an 8 candle. Then we're going to have a 9. Now, it's going to be a little bit like weird, because I think I need to start looking at the CL2 contract. CL2, the next level future. And you see, for the CL2 contract, there was a price flip, but you got to look at the like continuous contract. So there's also US oil, which is WTI crude, and this kind of smooths out the relationship between them. I believe, like I've never seen a contango this insane. Like I've never seen oil this insane. Like I don't know how far this goes. Like if I go to the monthly chart, how far does this take us? Holy shit. We are on the verge of going. I wish I can take this further into the 70s. How far does CL1 go? This is really fascinating. I mean, you guys are witnessing history right now. It goes to the same place. This is absolute history. I'll try to phrase this correctly. Anyone, like who the hell would have bet any amount of money from the year 2000 up until the year 2020 that the price of oil would be less than at any point since 1983? And that's where we are. Holy shit. I want to go to the yearly chart. This is like incredible, right? So the yearly chart allows us to see if we officially broke that low. Look, the yearly chart, this is bad. The yearly chart is only on a green 1 price flip. Though I have to say, we should use this one with a grain of salt, because it's one of these, well, actually, it's not even close to being the spirit of the 9 situation. We just broke this setup trend, but I don't know if we're going to close down here on the year. I don't think we're going to break the setup trend at the close because the year, kind of just started. And right here, this is your low. The low in oil was $9.75, and we may actually breach it before I get off the air today. I mean, that's how insane this is right now. We're at $11 a barrel. The barrel itself costs over $12, right? So the oil inside the barrel is no longer worth the barrel that you're getting it shipped in. So like buy the oil, get the barrel free, which is worth more than the oil. So you can actually buy the oil, tell them not to fill the barrel with the oil and just ship you the empty barrel, and you arbitrage and make money. Because once you put the oil in the barrel, it's kind of hard to use that barrel for anything else. Okay. I don't really know what else to say other than we're going to look at the daily chart only because I have the relationship. Hey, guys, I'm looking into adding multi-time frame into the indicator itself. So for those that have access, oil is going to hit a 9 tomorrow on the daily. I mean, if we drop any more, 1070. So I will finally be looking at USO. So USO is, I was looking at lumber. Well, I thought lumber was a little bit interesting. It's on a 9 as well. And I don't know who the hell is building anything these days. So lumber, if you're a futures trader, maybe an asset you want to keep an eye on. So USO, I don't want to spend, market opens in 5 minutes, so I do have to get to Bitcoin and S&P, but USO, there it is. So USO is going to open probably pretty damn low. So I may be looking at USO later today, and I may be looking, or I might wait till I actually see the 9 tomorrow. I don't know what I'm going to do, but I am eyeing oil here just because of the daily 9. But at the same time, I'm fully aware that the weekly is not done. The weekly just started a 7th week of down, but we can still get to our 9 on the upswing, right? So I don't know if oil is a good buy, but oil isn't going anywhere for now. And incredibly low oil prices are a problem for Tesla. So I can definitely see Tesla having an issue, right? Because like low oil prices help the traditional car industry, and high oil prices help the alternative energy sector. And therefore, the alternative energy sector will greatly suffer with the cheap oil prices. Good thing I'm out of Apache. I think oil exposure is not doing too good, but Apache did well on Friday. I'm curious where it opens. In 5 minutes, we'll know. All right, let's go to Bitcoin. I'm going to save S&P for last and I have a few minutes to look at Bitcoin. I do want to look at S&P before market opens. Bitcoin on a weekly, you can see the pullback right here. And not surprising because when I woke up, S&P was pulling back. And therefore, I did expect Bitcoin to pull back. In fact, the first thing I see on my cell phone is the price of Bitcoin because I have a widget that tells me the price of Bitcoin. So I open up my phone, I saw that the price of Bitcoin was under 7,000, and I immediately knew my S&P position was in the money. Now, it's not that because Bitcoin is just in front of me. So I saw Bitcoin was down, and I just said to myself, there's a high probability that my S&P short is making me money into market open. And sure enough, it was when I took a look at S&P futures. The daily chart is on a price flip. If it ends on a price flip, that would be it for the bullish potential trade, which I was always skeptical of because of an anticipation of a pullback in the traditional markets. I do believe Bitcoin is correlated with the general stock market, but the beta of that correlation should be lower. If you're not sure what I mean by the beta of that correlation, please take a look and research that concept. What is beta in markets? For our chart, not interesting, so we're not going to get into it. Gold and silver. Gold is hanging in there, and this is the possibility of the end to the 1 to 4 daily correction. This is actually a beautiful end to the correction because we are back at the point of the inverse head and shoulders breakout, which makes me somewhat bullish on gold. I may be re-entering my gold and silver trades. So I don't like to chase markets. So in a Tone Vays perfect world, when would he enter this trade? Whether it's silver or gold, it doesn't really matter. I'll probably go into gold this time. Last time I went into silver, but I got to check option prices and implied volatility. And I want to check the percentage moves. But in either case, the Tone Vays perfect trade for me, based on my risk tolerance and what I plan to do, I would want to not see, I would love to see this candle close exactly the way it is right now. And then tomorrow, a break of that candle's high. That would get me long the trade. Where would I set my stop loss if that is where I get into the trade? I would set my stop loss just below the swing low. You can see how very low risk my trade would be. My risk would be less than 2% on the drop of the asset. That would be my risk. If I apply this to gold, and market is about to open, if I apply this to gold, let's assume this candle closes the end of the day exactly like it is now, which is a very bold assumption. This becomes my entry above the green line. This becomes my stop loss below, just below that. I think I don't have the magnitude. You see there's a little gap there? Okay, now this is the futures market. In the ETF, it could be different, but this is the general idea. You guys are responsible for your own decisions. This is not trading advice. What is my risk? Oh, look at that. My risk on gold is lower. So therefore, the gold could be potentially a better trade. But remember, what's my target and how far did gold go? Well, gold from a reasonable entry, let's use the open, to I would have got out on the prior candle here on the 8 because I knew that silver was. So let's go close to close. Gold went up 20%. What about silver? Silver is also good. We could go open. We're going to stay consistent. Open to, well, I would have got out on that 9. So I am going to go open to open this time. I'm being consistent. I'm not going to cherry pick the very top, but I'm going to, and look at that, silver went up 30%. So while silver gives you a little more risk, silver gives you potentially more return on percentage. So it's, everyone has to decide for themselves. What happened to the arrow part of this? Oh, there it is. I don't know why it disappeared. Why did it disappear? That's strange. Anyway, maybe I have to do that. Oh, there it is. So it's really up to you to decide. I don't know which one I'm going to do, and I don't know if I'm going to do it. But if I was going to do it, and disclaimer, not trading advice, if I'm going to do it, that is my predefined risk. What is my reward? My reward is me buying a Lambo because silver became the reserve money of the world. Like I have no target here, right? I have no target. I have no expectation of where this thing is going to end. I'm in it, and I want it to go to the moon. S&P has opened, and it's opening to the upside. I need to check my broker. I want to see what's going on with my portfolio. So give me a second. Not bad. I do have some positions other than simply short the S&P, but those positions are relatively hedged. I don't exactly want to disclose those, but I do want to take a look, and give me a second, guys. I need to know if I need to exit anything. That's good. I am way more positioned to the downside than the upside. But I also have positions that may not be very optimal. I don't know if I want to disclose what I'm holding, but I'll tell you what I'm cheering for. And that's why we're about to go and take a closer look at Tesla. So I love Tesla. I think Tesla will be the biggest company by market cap eventually. But at the moment, I am short Tesla. So I would love to see Tesla not crash, not destroy their company, but I would love to see Tesla pull back into this golden cross. That's my goal. And these options do not have a lot of time. So I need this to happen in the next 48 hours because I will not be holding this trade beyond that. So there it is. So I would love to see Tesla pull back to at least $700 because that is my decent profit zone. And I need that in the next 48 hours. Otherwise, I'm taking the loss on this trade. Okay, that's the only other trade I'm going to disclose. And my trade at the moment is actually not profitable, even on my short with Tesla, because of the way I hedged the short. So my trade only becomes profitable in Tesla below $725 if it happens today. So I need Tesla below 725 today to be profitable. And if it gets to 700 within the next 48 hours, I become very profitable. So there you go. That's my current, and it's a little risky, but at the same time, I have lowered that risk. So if it goes against me, I don't get too hurt. This is option hedging, which I teach. Affiliate codes if you want to support my work. The options workshop is taking place next weekend. So there'll be no videos next weekend or Monday. It's a 3-day workshop, Saturday, Sunday, Monday. And this is where I teach this kind of stuff. All right, going back to the S&P 500, I may stay with you into 10 a.m. Now, if you look at the hourly chart, this is why I love this multi-time frame. We have, oh, did I turn off something? Hold on. I want the arguments. I don't want to take away the arguments. Okay. We have a 9 on the hourly. So if I flip to the hourly chart, this is my short entry into the S&P, by the way. This is my short entry into the S&P. I took this entry right here at 1:30 p.m. on Friday. And my trade's doing well. But this 9 is not great. I couldn't exit this trade because this 9 took place at the 9 a.m. at the 8 a.m. candle in the futures market. So I'm watching it. I am watching it for a 1 to 4 candle correction. And I'm also watching the 10 a.m. reversal back to the downside. So I'm actually not upset that the market is rising in the first 30 minutes of trading. I would rather see the market rise in the first 30 minutes of trading and then reverse at 10 a.m., go into new lows, than watching it go down into 10 a.m. and then watch it reverse at 10 a.m. Now, when I say the word 10 a.m., I mean 10 a.m. pretty loosely. It's not literally 10 a.m. It's around 10 a.m. Sometimes it's 11 a.m. And unless you are a professional futures trader, it is very difficult to take advantage of trading opportunities at that time. So, oh, guess what? My Tesla trade just became profitable. Is this on a delay? Boom. There goes Tesla. Like I said, I needed Tesla under 725 to be profitable in the trade. I'm not going to disclose the spread that I did. And there it is. I'm not profiting by much. At the moment, just a few $100, but that starts to scale very nicely. And with Tesla at 700 or below in the next 48 hours, because my options, I broke one of my rules that I teach about option expiration. And there it is. Tesla 716, 717. I think the oil prices causing investors to be very cautious, because if oil stays depressed for a long time, there will be less people interested in buying a Tesla because of the very cheap oil. They can basically drive their cars for free because they can fill up their cars for free. So there you go. This is the life. I really want to get out of this Tesla trade, and then the only trade I will have is the short on the S&P. And once I get out of the short of the S&P, the only other trade I may enter is a long in oil if I see an opportunity, and potentially a long in the precious metals. Because I can't be too distracted with individual single name stocks this week, because I need to put together the options workshop. And therefore, once I get out of Tesla, I don't want to deal with individual companies. And we're about to go into earnings season, though I don't think that really matters, because the general market will trump earnings at the moment. But I would love to see Tesla below 700. Like below 700, I can actually make decent money in this trade. All right, how did Amazon do? All these nines, man. Oh, Amazon is still up. Wow, wow. Amazon is like the only one holding the market. I had no idea. And Netflix, Amazon and Netflix are holding up the market. If they turn, that's what's keeping the S&P up. Amazon is one of the biggest components. So that's what's making the S&P go up. If Amazon turns this afternoon, that's it. S&P is going down. It's Amazon and Netflix holding it all up. Yeah, Apache's down 32 cents on $8.50. That's a big percentage drop. If this goes back above this line, I may have to admit my short trade in the S&P is no longer ideal. It is an options trade. I have plenty of time. Time decay is not an issue, unlike in the Tesla trade. And I'm just waiting till the 10 a.m. and watch the prices go back down. That's my anticipation. The market doesn't have to do what I anticipate it to do, and I will adjust accordingly. I'm not really looking at live chat, guys. I only have so many monitors, and I was looking at my broker. I don't know if I want to do questions. There's never a time to drive your car for free. Don't forget wear and tear on parts. Yeah, I know, but the cost of your parts over the course of the year is not as big as the cost of oil. If you have a somewhat new car, you're not doing that much maintenance. I'm sorry. It's not free, but it's huge savings. All right, what do we got? We're at 9:40. This is the 9:40 a.m. candle. A little early for a turn. In the market. I'm still a little bullish here, and that's okay. I'm not a day trader. I'm a swing trader. I can stand this I'm perfectly okay with this volatility. I'm only going to get nervous if we go back above the red line, but I fully expect us to back test the red line. Here's what I mean. Here's a classic situation. I'm going to move this red line. I mean, this red line represents my entry of the trade, but the red line should really be right there, because by putting this line right there, we are using the body of the candles of the last swing high on Friday. We then broke above it at end of market. Then early this morning in pre-market, we back tested this prior high, bounced off of it, back tested it again the second time. Whenever you back test a support level for the second time, you make it weaker. You bounce a little bit, you test it for the third time, you made the support level weaker. You bounce up, you made a lower high, and boom, here's your candle that crosses below that support area. That's it. That's the nail. That's that nail in the coffin. This is where shit hits the fan. And I explained this in a video last week. So once this candle occurs and the next candle cannot get you back over that line, what is your reasonable expectation of where the market's going to go? Potentially 1% down. You take the fat part of this, they're all about the same. So 1% down, where was the target? Right there. We've exceeded that target in a matter of hours. So I'm not surprised we are bouncing here, but this bounce I fully anticipate to be short-lived. Now, once again, my statement is 100% biased because I am short in this market. But if I wasn't short in this market, I am pretty sure I would say exactly the same thing I'm saying now. While this is perfectly normal action of the market, bouncing, I don't even expect us to get back as far as the red line because we overshot the target. So we can go up 1% from here. And if we go up 1%, we will not reach that line. We will only go up to about here. We're going to come up just shy because we overshot the line. We should probably come up just shy. And when do I expect the bullish candles to end? I expect them to end in about 15 to 20 minutes. I may stick around with you guys for this. Hopefully Tesla's still down. It's going up a little bit, which is not good for my position. But I am staying patient. I do not I do not make rash decisions before say 10:10, 10:10, 10:15. I give it a little bit of wiggle room, 10 minutes on each side of 10 a.m. before I make any critical trading decisions. And this is the time for me to watch the market. I don't enter trades at this time. I don't exit trades at this time. Though if it looks like my portfolio, there are exceptions. If I was in oil and something like this was breaking my portfolio and causing me to potentially never trade again by getting me wrecked in pre-market, and I was in the short oil futures, I would exit that trade. So this does not apply to catastrophic stop losses, but in an orderly market, and to me this is an orderly market, relatively speaking, I am expecting a turn in the market sometime between right now and the next 30 minutes. Probably closer to 15 minutes from now. And I'll probably stick around. Let's see if there's any good comments or questions in the live chat. US will pump oil with another war. Maybe. I mean, there's certainly politicians that want to start a war with China right now, unfortunately. Tilray making a nice move up. I don't want to look at that. I got out of my Tilray trade. I got out with a nice profit, but I was hoping it would pull back so I can get in again. Slack is on a daily 8. Good. Tone, is it worth shorting casino stocks and their parks? I can't give trading advice, guys. I don't know. Disney's holding up fairly well because of their media and their TV channel. I don't know. I haven't researched. I don't research individual stocks, so I'm a TA guy. Tone, what do you think? What do you think? I don't want to look up stocks right now, guys. I'm just watching the overall S&P. Like I said, I'm not surprised we're rising in the morning, but I expect this to turn. Now, remember, low oil prices are also good for the stock market because your companies become more profitable if they don't have to waste their revenue on oil. And every company needs oil in one way or another. No thoughts on Euro USD. Don't really, guys. I don't want to look at stocks right now. You can stop putting tickers in. Do you think oil is in a hyperwave? I don't know. I'd have to do some analysis. Sorry. The VIX. Oh, I'll take a look at the VIX. See, Amazon's pulling back, but market's rising. Yeah, I really wanted Tesla down here. It was nice. Maybe I should have exited, but it was before 10 a.m. So I didn't want to exit Tesla. I wanted to give it, I wanted to give it a go. I'm willing to exit my trade around $700 today. If I'm holding it into tomorrow, I'm going to need it to go further than 700. But if it gets to 700, I'm happy to take the profit. VIX. And right now, my trade is not profitable. So right now, my trade's actually at a loss. It's a very high leverage trade, but it's hedged. The loss isn't huge, but my trade is at a loss at above 735, and my trade is at a nice gain below 725. Not a nice gain, but a gain. And I want to exit around 700. VIX. Not trading advice. Don't follow other traders. Following other traders will only lead to one outcome: the loss of all of your money. You learn how to trade and you make your own decisions. Volatility is up. Not surprising. I don't know. I wanted to trade volatility, but it doesn't look like. I don't know. I'm not going to complicate my life this week. I'm not going to deal with the trades on volatility. I don't like this action. I do like this. A green 2 tomorrow above a green 1 makes it kind of beautiful, but I may not want to complicate my life. Do you agree with Jack Bogle? I'm not familiar with Jack Bogle's work. That investing internationally isn't necessary since the S&P 500 is already involved in other countries. Yeah, pretty much. Yeah, I mean, I'm okay with only S&P 500. It's pretty diversified. Tom, what platform do you trade on? I trade on Interactive Brokers. Will the $400 billion deal for small business pull the S&P up? I don't know. It looks like it has. It looks like it's pulling it up. It's pulling it up right now, but I still think the market is overdue for a correction. Look, let's look at the big picture. Here's the big picture. Someone put a really good comment the other day. Tone, why are you going against what you normally talk about, which is, if the trend is up, stay with the up. I've been looking to short the S&P multiple times as it did what? As the TD sequential went up into a 9. So my favorite tool for trading, the TD sequential, all I had to do was trust it. All I had to do was be long S&P as of a green 2 above a green 1, which would have been difficult because this was a monster gap up that got crushed. But all you got to do, all Tom Vays had to do was trust his most trusted indicator, the sequential, and I would have been long in all of this into the 9, and this is where I exit. Doesn't mean I have to short, but I could have got out of my long. And this is a red 1 price flip, and if we hold the red 1 price flip today and hold below this moving average and get a red 2 below a red 1 tomorrow, that's what I'm supposed to be shorting. But I'm already short, not near the top of that 9. I would have been short near the top of the 9 had I waited another hour or 2 before entering the trade. But my trade is still profitable, and I think we're about to top next candle. Now, once again, I am going against the TD sequential. The TD sequential on the futures market says, hey, you have room for 40 more minutes, right? You have a 5, there's a 6, 7, 8. But I think that the forces of a 10 a.m.-ish reversal are about to play out. Now, if you think I am manipulating the overall stock market, you would be insane. This YouTube channel does not influence the overall stock market. So no matter what I say, and here we go. So now I think we are about to start a path down. Not trading advice, just analyzing the market. As you can see, I am sitting here talking to you. I am not entering any trades. My trades have already been entered. I am watching Tesla to the downside, and I am watching the stock market to the downside. Those are my biggest two positions. My other positions are somewhat insignificant in relation to those two positions. So those are the two positions that I am scared of if they go against me, because that could create significant losses that I have to babysit. If New York can enter phase 1 of the recovery by June, do you think the market will continue higher through year's end? Okay, so let's get back. So I have been completely wrong on several things in the market. Never in my wildest dreams did I anticipate a move up after this candle. Okay, so I have absolutely no opinion as to what the stock market will do based on the coronavirus, because based on the coronavirus, the stock market should be nowhere near 28 at current prices. I think it should be significantly lower. So therefore, it is not wise of me to anticipate the future of the stock market based on my opinion of where New York or other states are at their recovery stage. At this point, I am done doing fundamental analysis because it has failed me once again, like it always does. I will go back to my bread and butter, which is technical analysis, which has allowed me to be a successful and profitable trader before I learned what Bitcoin was, and then I kind of fell into that rabbit hole. So other than the technical analysis view that this rebound has gone up too far, too fast. So my current reason for being short the stock market has absolutely nothing to do with the coronavirus. The fundamentals of stock market, Federal Reserve, coronavirus are now out the window. I no longer care to analyze the S&P 500 from a fundamental perspective, whether it's coronavirus, oil prices, whatever, irrelevant. I am now strictly looking at technical analysis. And technical analysis right now is telling me two things. We are potentially being rejected by a very crucial 50-period moving average. We are also coming off a TD9 on the sequential. And this run-up from here to here has been one of the biggest and fastest in history. And because of those three things, I am bearish in the market. Not because of Corona, not because of the lockdown. I am bearish the market because of TA. I have made several bad attempts to short the market based on fundamental analysis, and I am currently shorting it based on technical analysis. If this short fails, I will then go back to the drawing board, once again, using only technical analysis. And if technical analysis gives me a daily green 2, above a green 1, above the 9, it doesn't matter if Trump comes out and says, we're going to literally put a police officer in front of every single door in America and not let you walk out. If I see a green 2, above a green 1, above a 9, guess what trade I'm entering? So it's back to only TA. All right, let's go back to the futures and watch 10 a.m. 10 a.m. is coming up in 4 minutes. I'll stay with you guys till 9:10, and then it'll be time for me to manage my portfolio. What do you think of the housing market in the near future? I am very bearish the housing market in the near future, medium future, and probably, well, potentially long-term future. Because I think this financial downturn is going to destroy people's ability to buy a home. It would increase people's desire to sell a home. And like I mentioned in prior videos, the amount of empty land on this planet to build a home is ridiculously what's the word I'm looking for here? Let's just say there's a shit ton of empty land that you can build a home on. So I'm not very bullish home prices. Also, you got to keep in mind, due to the current shutdown, more and more people are learning the need to work from home. More and more people may enjoy working from home once the kids are out of their hair and back in school. And therefore, the need to live in a big city and work for a company in a big city will become smaller and smaller and smaller. So people no longer have to pay for the apartment in New York City to work in New York City. You can live in California and work in New York City because you can work remotely. And I think that's going to increase, though California is even more expensive than New York City. So you may want to, I don't know, live somewhere in Alabama for a $30,000 nice home that would cost you $300,000 in the middle of Manhattan. So there you go. Yeah, and good luck finding something for $300,000 in the middle of Manhattan. You won't. That was just a horrible analogy by my part. The Chinese want to take over the world. So do the Maltese, right? I mean, so do, I don't know, the people from Fuji want to take over the world too. They just don't have the resources, right? The Chinese are just a little closer to those by in having those resources. And if the U.S. keeps its economy shut down for the next, I don't know, 3 months, the Chinese actually have a shot. Live in a grass hut and work on Wall Street. Of course. Of course. I can do that. I can go, live in Thailand or whatever in the village of Ukraine, as long as I have good internet there. I can easily work on Wall Street. I'm working on Wall Street right now. I'm trading. Can you check Uber? I'm not checking individual stocks right now. Sorry, guys. I don't want to get into that rabbit hole this morning. I just want to watch the market. All right, Peter, the best hairdo in the industry. Thank you. Do you believe oil could go negative? You know what? It's actually possible. It's actually possible oil could go negative because you know what? It wouldn't be the first time, right? Because oil used to be negative. The value of oil used to be negative. Before, I think, 1875 or so, the price of oil was negative. Because if you bought a bunch of oil and you wanted to build something and you stuck a shovel in your ground and a bunch of black goo came out, you got a problem. That oil just ruined your land. So at one point, oil was negative. And one day, it is very possible that oil would be negative. Because if there's no longer a need for oil, oil becomes a horrible substance to deal with. So yes, theoretically, oil could go negative, where you have to pay money for someone to get oil out of your ground and get it out of your hair. It's kind of like, you want to build, you want to make your house bigger. So you want to build an addition to your house, and there's like a tree and a giant boulder. Like, well, what's the value of that tree? Is the value of the tree positive or negative? Well, if you're going to buy lumber to build your house, the value of that tree is obviously positive, and you have to pay for it. But if you ever owned a home and I have a cabin in Pennsylvania, and I've cut down many trees, and you have to pay a lot of money for a guy to come and cut down the tree. And I would love to, sell that tree and have someone come pay me money to take that tree down, but I gotta pay him money to get this tree out of my hair. Now, same thing with rocks, right? You gotta eliminate a giant boulder from your property. That shit's gonna be expensive. So yeah, I can certainly see a future when we have renewable energy at a much more efficient rate, that the value of oil is negative. Is the 10 a.m. reversal in yet? Yeah, it is. There it is. Topped a little bit earlier than I expected, but this candle was a green candle at one point. So the official top, we can go to a 5-minute chart. See, this is why I don't react harshly. If we go to a 5-minute chart, we top at 9:45, or closer to not. We top after 9:45. Or we can go to a 1-minute chart. We can really see when the market tops. The market tops at 9:48. I really like the market topping after 9:50. It just makes it cleaner on a 10-minute chart. Anywhere between 9:50 and 1 second and 10:09, 59 seconds. I mean, I prefer to see a market top on the following candle or current candle or the candle after. But to me, unless this candle shoots up, unless this candle breaks the tops of both of these candles, I'm going to assume the 10 a.m. reversal is in. I have absolutely no idea if this reversal has already ended or it's going to keep going for the rest of the day. It is impossible for me to know. I am not a psychic. I can just analyze the market. I would love to see this make a new low because, again, I am short in the market. I have a very biased view on what the market is going to do, and B, what I want the market to do. I'm not currently happy about this candle, but it's only half the life of the candle. As long as we are not breaking both, as long as we're not breaking this high, I'm still confident in the market reversal here. I could be wrong. But my trades are positioned for the short side. Time is my enemy. This is the Tone Vays options rule number 2. Yeah, rule number 2 of options trading. Time is my enemy here. Sometimes I do trades where time is my friend, but time is my enemy, especially in Tesla. So I really need Tesla to get back below 720 today. Otherwise, my trade is very, very, very problematic. I will be getting out of my trade, most likely on Tesla at some point today, but I'm staying patient because I still believe the market needs a pullback. Not for fundamental reasons. I don't care anymore. I've clearly been wrong that the coronavirus or the shutdown should cause problems in the stock market fundamentally. That's clearly a mistake. The market will always stay irrational longer than you can stay liquid. I am short today for fundamental reasons. I failed shorting the market in prior weeks for fundamental reasons. Hopefully this week, I will be right for technical reasons. And this will teach Tone Vays a lesson not to do any more fundamental analysis in the future and stick to the technicals. We took a look at oil earlier. I want to take a look at Bitcoin. Let's see what's going on. Now, the market is rebounding this morning. So Bitcoin is also rebounding this morning as well. again, if the market turns, I don't want to say when the market turns. Again, I'm not a psychic, but if the market turns like I expect, Bitcoin will probably turn and go down a little more. I am completely neutral. Your daily chart is neutral on a red 1 price flip, and your weekly chart is also neutral with a red 3 that is not, with a green 3 that is not going above the red 2, staying below a very critical Fibonacci line of resistance. Though actually, no, this line is actually no longer, no, it acts as resistance because of this, not because of the line itself. I'll leave it there for now. We're about to remove it. I'll go back to oil. What is this? Oh, my data is loading. Oil's pulling back up a little bit. We dropped below $11, which is funny and not funny at the same time, like the Strozenberg's cat. 1077 on the low. So the sequential is messing up right now because CL1 contract keeps flipping to CL2 contract, and it's kind of messing with this. So I'm gonna use US oil instead of CL1 because the way they're it's accurate here. It's not the code's fault. It's the TradingView's fault. Back to the S&P. All right, still correcting. Man, I want to hang with you. Oh, not anymore. I'm still staying patient. As you can see, I'm not acting on any of my trades. I'm staying patient. I'm still trusting that 10 a.m. reversal, but that trust is slowly deteriorating. And what kills it is a new high. So this candle is going to end in 36 seconds. I don't believe we're going to close above the prior candle's high. But if the next candle starts to close above the current candle's high, that makes me nervous. I'm not saying I'm going to act, but I'm just saying that makes me nervous. And there are now, all right, 15 seconds. There will be 3 levels of nervousness. The break of current candle's high, the break of prior candle's high, and the break of daily high. The break of daily high is very concerning. But the first step to get to a break of daily high is the break of prior candle's high, which is about to happen. Now, here is what's working in my favor. The sequential. There goes the break of prior candle's high. Now, while this makes me nervous, I am not ready to act on my trades because guess what? The 9's coming. Maybe it's coming. So either the count's going to break or I'm going to get a 9. I trust the sequential. It has done decently on a 10-minute time frame in the past. Here is, oh, this top shouldn't really count because it took place after market hours. Here is a 9 right at the high. I've had them before. They're not perfect. It's just a 10-minute candle. They're not perfect. Also, don't forget, we are dealing with an hourly 9 buy right here. So we are looking at a 1 to 4 hour upswing. So there are reasons. I'm not trying to make excuses as to why I need to hold on to a bad short trade if this thing starts to go up. But I have enough risk tolerance to stay patient because this 1 hour 9 is telling me that there could be upwards momentum in the market. The 10-minute 9 sell is coming up in 25 minutes, which gets us closer to the 11 a.m. area. I really don't like this consolidation. I certainly don't like the break of this high. The chart pattern here tells me we should shoot up. which we are right now. But I'm not going to panic out of my trades yet. I will stay patient. We're getting close to the day's high. I can't stay with you guys all day, though I do have 1,200 viewers. I'm not looking at your live chat right now. That is not yet a break of, I think I need to hold control. Yeah. And then hold shift. That would be a break of daily's high, which is probably more likely to happen than not at this point. Whenever we get so close to a number, there's a high probability of breaking that number. So right now, I am leaning to the break of that blue line, and that would be okay as well. But I'm also watching the 9 coming up in 25 minutes. I highly doubt I'll be with you guys when that occurs. I'm still looking for the market to top in this vicinity. But I don't like the chart pattern that it's making. Markets don't top like this. This is why I'm expecting it to go higher. Markets don't top like this. Markets top like this. Markets usually top like this on a single candle, or a candle going down the following candle. Markets do not top. Well, they can, but they normally don't. Here's an example where they did, but it's rare. Markets don't normally top like this and then come back and then come back. I expect it to break out, which it didn't actually do. It happens, but it's not common. Okay, here's the opposite example. Double bottom, I expected this to keep going lower. Because of this double bottom, it did not, went higher into, this is why I was short here with the anticipation of breaking this low. This is how markets usually top, on a single candle. Not a double candle over a 4-candle span. We've broken that top. But now I would love to see a higher high, because that gives me a perfected 9. If we turn here and start to go down, we may or may not get the 9, and that 9 will not be perfected, if you know what a perfected 9 is. So, oh, someone's telling me 15 minutes on a 9. 15 minutes has also not done too badly. Let me see. No, 15 minutes is not on a 9. 15 minute bounced off of a 9. See, this is a 15-minute 9 buy along with an hourly 9 buy. Here's our 15-minute chart. Not on a 9. Beautiful top on a 9, though. At midnight, though, so I would never trade that. I like trading during liquidity hours, which is market hours. You can glance at a 5-minute chart. Yeah, see, this is not the kind of 9 I want, because it's already on the way down for the third candle in a row. I'm still looking for a market top in this vicinity. I'm still staying patient. I haven't touched my portfolio at all. All right, I think I'm going to get going. I don't think I can just babysit this. We'll see where it goes. I'll bring you guys an end of market video when it's all said and done. Good luck trading. Once again, please check out the affiliate page if you want to support. Options trading is a 3-day workshop, and we will. Well, I need to work on this. I want to make it better and perfect. So I have plenty of work to do. You can purchase indicator access, purchase the on-demand videos. Remember, the sequential indicator is an advanced trading system. If you don't know how to trade, this will not help you. You have to know basic technical analysis. You have to understand risk management, and you have to know how to set your stop losses. If you don't know these things, this will not help you, okay? And if you want to support, please check out the affiliate page. All right, guys, I'm going to stop the screen share, and I'm going to babysit my trades without entering any. I'm not going to be, hey, it's going down. I'm not doing screen share, though. Starting to go down. Anyway, all right. Thank you so much for watching. Ending with 1,200 viewers. Good luck trading. It's intensely difficult. Don't let anyone tell you it's easy. And I will see you all on the next one. Bye, guys.